It is famously said to make money in India, you need to invest in the ABCs, astrology, Bollywood, and cricket. But when it comes to Vikram, we're going to talk about AIFs, Bollywood, and cricket. What was the difference you found between working in the US and, let's say, working in India?
Working with IBM, very good experience because I traveled across the country. I traveled with various hospitals, pharma companies. The only asset I had was my network of the IIT alumni ecosystem. So the original model was of the IITians for the IITians by the IITians. The idea was to reach out to the entire alumni base of the IITs across the world.
Okay.
Ask them if they would like to invest in a fund. Our thesis was very simple. We said India was going to do well as long as the market opportunity is huge and large enough and the company can be number one, number two, or even number three. Then it comes down to execution. And execution is about the founders' ability to execute and their willingness and their passion and their incentive structures. When I started IvyCap, there were 8 funds in the country. Today, I'm told there are over 1,500 registered funds with SEBI. First investment of Fund 1 didn't do very well. First investment of Fund 2 didn't do very well. First investment of Fund 3 also was shaky a little bit. So we kind of decided that Fund 4 onwards, we'll start from second investment.
Well, hello and welcome to one more episode of the Money Talks. And today we literally are going to talk about the ABC of investing in India. It is famously said to make money in India, you need to invest in the ABCs, astrology, Bollywood, and cricket. But when it comes to Vikram, we're going to talk about, well, AIFs, Bollywood, and cricket too, because that's how we met at the IVCA event. But Vikram has a checkered history. He started out as a professional. He worked at Purplle and then set up his own fund. And he's one of the largest fund managers in India, who have raised primarily domestic capital, managing, I think, roughly about 4,500 crores.
I think now we are about 5,500.
5,500 crore. That's a lot of money. That's a lot of zeros. But we're going to talk about, before we get to these numbers, we're really going to talk about the journey because in many ways, I think Vikram has really seen the growth of venture capital in India. And he can also provide some perspective of what it takes to really attract Indian capital into an Indian venture capital fund, investing into Indian startups. He's done IPOs, he's done exits, he's seen everything in Purplle and beyond. So Vikram, without further ado, welcome to the Money Talks.
Thanks, Nirudh. First of all, congratulations for such a brilliant show that you put together. So I always look forward to watching your episodes. So.
Thank you so much. So Vikram, I think let's just dive right into it. You obviously went to IIT, and post that you went to Lupin. That I think was your first job, and you also did a stint at IBM before delving into becoming a founder. So can you talk a little bit about this whole journey? Because getting into IITs back then, and as we heard in the budget today, the number of seats at IIT have gone up by a huge factor. But when you went to IIT, it was very difficult to get into one.
Yeah, I joined IIT Delhi in 1989.
Wow.
That time there were 2,000 total seats.
All India?
All across.
Wow.
There were 5 core IITs.
Okay.
IIT Delhi had about 350 seats.
Okay.
Now I think the finance minister announced it as 6,500 new seats.
Wow.
Across 5 IITs that were born after 2014. Mm-hmm. Which I think is quite heartening to see. I think now there are 23 IITs and centers of excellence building across IITs. I think very heartening to see what's happening in India now.
Yeah, and that, plus the IIMs that are also coming up.
Yes. So, of course, there are quite a few campuses which you may not even have heard of, which is, again, a good thing. Because I think India is just at that stage where we need to build our fundamental grassroots level education system and also research and innovation across our education system.
So, prior to joining, Purplle, you had a very interesting, 2005, becoming a founder, not very sexy, not very well known of. And usually people think about, launching one venture at a time. You launched 3 at the same time, right? So what drove that decision?
So actually, I had this entrepreneurial blood right from my childhood. Achha. In fact, when I was in my 7th grade, I started a small business in lotteries at home.
Wow. Okay.
So that was just to test it out how it works, because I had this craving that let me test how it works. And I still remember I just on a piece of I took a notebook and I just cut a few lotteries, 1 rupee each, sold about 500 of them.
500 lotteries. Wow.
Yeah, and then I think gave a first prize of 200 rupees and second prize of 100 rupees, and there was profit of 200 rupees. So it was actually a very interesting thing to learn by selling that just in my housing society, and
Wow.
so it was a very interesting experience. So that bug was there for a long
see.
time. Even when I was in the US, when I joined IBM after my MBA in the US, so I used to go back to my college to actually work with entrepreneurs to understand what they were doing and also to coach them and work with them. But I couldn't do much in the US because I was on an H-1B visa. So that was one of the reasons I wanted to move back, because I wanted to set up something on my own. And that was the key driver for moving back as well.
Acha.
So I started, initial thought process was to start something where there was a huge opportunity. I actually worked in healthcare life sciences most of my career before that.
Okay.
Including in IBM. I was working in healthcare life sciences as a vertical. So I thought there was an opportunity in medical tourism at that time. So I tried to set up a business in medical tourism, a company called Medigo Round, which I created in 2005. Onboarded about 15 hospitals in India, including Apollo Indraprastha, which was the first hospital in India with JCI accreditation.
Okay.
There was a buzz around medical tourism at that time, but not many people understood it. I kind of underestimated the effort required to be an entrepreneur because I thought, let me do it. But then I realized you also need funding.
Correct.
You also need a team. And those were the learnings I had during that time. So I did another startup, which was basically in the outsourcing business.
Okay.
Which is basically helping the US companies to really outsource their processes, like a BPO kind of a business around that time. And again, the same problem. So you needed funding, you needed some kind of a basic setup. And I also tried to set up a recruitment business that time called SourceMind, with the idea to work in very specific verticals and help on the recruitment side, because I saw a huge opportunity there. So these were three businesses I set up around that time. I think it was probably just that passion to do something different and to do something of your own. Also a huge learning experience of how really these things are done.
Right.
So yeah, I think
In 2005 would not have been very easy to start a company.
Not at all, especially when I was moving back from the US at that time.
Right.
I first moved back to Delhi, where I had the support system, my family, and everything was there. I think the most important was the medical tourism business, where I spent most of my time. But I couldn't really take it to the next level because nobody supported me at that time. So I kind of learned my lessons at that time.
And then from there, how long did you run these businesses for?
About a year.
About a year.
Yeah.
And then what drove you to then join like Purplle Enterprises?
Yeah. So somebody introduced me to Ajay Piramal.
Okay.
And I was trying to pitch my medical tourism business to him.
Acha.
And that's when he said, why don't you come and join me? And he was looking for someone in the M&A and strategy and planning, which sounded quite lucrative to me at that time. So I decided to join him because that also I had to make my ends meet at that time. So I joined Purplle. I worked with him for 5 years. Initially, worked on his strategy and planning on most of his businesses, helping them scale, like Path Labs, their diagnostics business, scaling up from just a single lab to about 125 labs, acquiring labs one at a time, and then selling it to SRL over a period of time. In a very short period of time, 3 years, we built a very strong business, 0 to 600 crores. Then R&D business of Purplle. Again, I did quite a bit of work there. We took it to IPO.
Wow.
Then
You were part of the IPO process?
Yes.
Wow.
And that's where I learned my game in terms of how all these things work. And then, of course, quite a bit of M&A I did. I acquired a CRO in Romania, something that I sourced myself, and I completed that transaction. Did a JV in Japan, did a JV in UK. So all that experience was actually quite learning, I would say. But in 2007-8, I started working on a private equity fund.
And inside the Purplle umbrella.
That's correct. So I still remember.
Before you get there, I just want to understand, like, you worked for such a long time in the US, I think about 6-7 years at IBM.
Roughly about 5 years.
5 years.
Yeah.
And then you come to India, still not very much, I mean, they're getting corporatized, but I think very early in the days. What was the difference you found between working in the US and, let's say, working in India?
Actually, US working with IBM, I'm talking about the early 2000. So 2000, 2005. Those days, it was very early for this entire internet boom, etc.
We were in the bust phase, I think.
Yeah, 2000 was that, where just before 2000 there was an entire Y2K boom, and then, there's a lot of talk about the e-commerce, but there was a bust at that time.
Correct.
2001 was a bad year to graduate. I graduated from my school, MBA school.
Right.
And I joined IBM from campus. And I was very fortunate to have joined IBM because a lot of my friends who joined other consulting firms actually got laid off.
Acha.
2001 was also 9/11 year.
Correct.
And economy was in real bad shape at that time. IBM actually was a great company to work with because they actually took care of their employees. Very good experience because I traveled across the country. I traveled with various hospitals, pharma companies, CROs, medical insurance. So this was all across the healthcare life sciences verticals.
Wow.
So I think that was a very good exposure to learn the business. It was strategy and technology consulting. And
this is all pre-Obamacare, which came in 2000.
This is pre-Obama. George Bush was the president at that time. So I think there was a lot of cutting edge things happening at that time. So I was leading a practice for IBM called clinical genomics.
Okay.
And genomics was a new concept at that time. So we actually created those assets within IBM, which later on went into a project called Watson Project.
Wow.
Which actually became the basis for the entire electronic health records and building the healthcare infrastructure for the country. So that was an amazing experience. And I think it was not easy to leave that and, come back to India. And I think one of the key issues was that, the green cards were taking a long time and I wanted to do something on my own. So I thought it's better that I just go back and do something on my own.
And then when you come here, Purplle was also, I think at that point, as a group also getting together, galvanizing into a conglomerate.
That's correct. So it was in the growth phase and it was trying to still establish itself in the healthcare business.
Right.
Basically focused on 2-3 verticals. I think M&A was the main strategy for the Purplle Group.
And was it really good for you to be so close to Ajay Purplle? Because obviously in a company in growth phase, seeing a founder very close, in still, very much shackled India, I would say. 2000, 1991, dream budget, all that great stuff. But the socialist part of the economy was still being taken out. And I think we're still taking that out over a period of time. But at that time, to see a company like that grow, IPOs, right? What was that experience like? I don't think many founders understand how difficult we had it. So,
to be honest, this was my first boardroom experience. Right?
Achha.
So actually sitting next to the chairman of the company and making presentations to the board. And I still remember we were talking about the entire strategy for the R&D. And we had hired McKinsey consultants, and McKinsey consultants from all over the world actually came for that presentation to pitch for the whole the funding aspect for the R&D.
correct.
And I just made one slide and presented what all can be done as options in terms of the business going forward. And IPO was one of the options there.
Right.
And it kind of emerged as a very natural option that we should actually try that deal. First of all, kind of put it as a separate entity and then take it to listing. So I think that was an amazing experience working next to the chairman of the company. Ajay is one of the shrewdest entrepreneur I've seen. I would say I learned the foundation of investments from him. So I give a lot of credit of making investment decisions and learning all that from him.
And then scene now shifts, right? You go from being part of a large company, IBM, global conglomerate, to an early growth conglomerate in India, now obviously a very large enterprise. And then you say, hey, I'm going to go do this thing called private equity in, I think, 2007-8.
Yes.
Really at the peak of private private equity, you set up a fund. Tell us about this.
Yeah. So 2007, I remember Mr. A.K. Purwar, who's the former SBI chairman, had joined the Purplle group to help them setting up the financial services vertical. And Ajay said, why don't you help Mr. Purwar set up that vertical? So I remember Mr. Purwar called me and he said, do you understand what is private equity? And I said, come again. What do you mean by private equity? So this was like, he said, okay, don't bother. If you don't understand, then, don't bother. So I actually said, no, now I want to know what it is. So then I kind of did some research of my own. I said, wow, this is great. Actually, I wanted to be an entrepreneur, and I realized that with this kind of a model, you can actually support so many entrepreneurs.
So true.
So that is what excited me a lot. So I said, no, this is what I want to do in life. So I went back and I said, now I know what is private equity, and I would love to do it. So he said, no, it's fine, but okay, let's do one thing. Let's actually put together a deck and present it to Ajay and then see if we can do something. So started putting a deck together and made a presentation to him, and he said, okay, everything is fine, but you have these problems. So it took me 7 months of back and forth. So every time we would go to him, he will shoot it down with something or the other. And I think that itself was a huge learning experience.
Wow.
I still remember, after all this, every time you would go, he would say, okay, where are the deals? I'll go and look for deals. I'll bring the deals and I will say, okay, how do you structure the deals? And I'll go back, structure the deals. He'll take it to the, now he'll say, what is exit? And I say, exit? What is exit? So वो भी कुछ होता है.
Correct. पैसे वापस देने पड़ते हैं.
So that was an amazing experience. Actually, I would say that the entire thought process of exits was seeded in my mind at that time.
Wow.
And that has been the fundamental philosophy based on which the entire venture capital private equity business should be built. And that's how I built IvyCap, because I knew that one of the fundamental issues is about giving money back to the investors.
Correct.
So finally, I still remember, even after 7 months of this effort, it was not moving because I didn't have the experience.
Correct.
So he was finally convinced that, the group should do private equity. But he was not sure whether I was the right person to run it.
Right.
So one day I just saw some senior from IT Delhi walking out of his office, and I said, what are you doing here? He said, oh, these guys are setting up some fund in healthcare, and I was interviewing for that. So I was like, what? this is something I've been working on. Yeah.
Oh, wow. Okay.
So I was so upset, and I went to him and I said, look, looks like you want to do it, but you don't want to do it with me. So so I said, here are my papers, and I'm moving on. So he said, oh, looks like you're very serious. Okay, why don't you run it? So that's how it happened.
Wow.
I mean, I still remember the 2 questions he asked me at that time. Do you have a team? I said, no, I don't have a team. He said, do you have backup for 2 years? I said, I don't have backup for even 2 months. So he said, okay, then sit down and do this fund. So that's how I started doing that private equity fund.
And tell us about the first fund, the first investment.
So by the time we started doing this, and this I'm talking about, we just entering 2008. And initially went to Singapore, Middle East, even partnered with at that time something called Dubai Bank. Okay. They were ready to partner for a $200 million fund. They were ready to anchor it.
Wow.
Yeah. So everything was set. Things were taking off. And then 2008 crash happened. So all of a sudden, was left nowhere. So then, obviously, anyways, there was less kind of a motivation in the group to kind of prioritize it. So said, okay, let's postpone it. So then Mr. Purwar and I talked about it, said, fine, why don't we focus on the domestic market?
Correct.
So between 2008 and 9, we focused on the domestic market.
In terms of fundraising?
Okay. And dollar used to be about 40 at that time. So raised about 400 crores. In about 9 months.
Wow.
From 30 plus Indian institutions. And this I'm talking about after the Lehman Brothers crash happened. The markets were melting everywhere. That was a very, very humbling and amazing experience. I had never done fundraising before. I had never done private equity before. I had never done investments before, other than the M&A part. So that was an experience of going to every investor, pitching to them, convincing them, and bringing them on board. So,
And
yeah.
what was convincing them? Like what were, let's say, the one or
So
two
I
things
would
they
say
convince?
that there were two things at
Okay.
that time. So one was there was a brand of Purplle, and the second was Mr. Purwar was behind the fund, and the third was actually the thesis of the fund, which was healthcare.
Right.
So despite the fact that the markets were going down, our whole pitch was that this is a healthcare fund, and my background was all healthcare,
Right.
and I understood the healthcare sector.
And by
So-
that time, I think you almost had 7-8 years of practical experience in healthcare.
Yeah, so I had quite deep experience
Yeah.
across the verticals in
Correct.
healthcare. So that was the pitch, that I understand the sector, and I had gone through the whole grind over 7 months of the preparation in terms of understanding how this works. So I was able to take that messaging to the investors, and these were the who's who of Indian institutions. The largest banks, insurance companies, the government, and who had never invested in such an asset class before, they invested in that fund. And we started investing in 2009,
Okay.
made about 5 investments, invested in a hospital. First investment was a hospital called Kaveri Medical Center
Okay.
out of Trichy.
Trichy,
Yeah,
okay.
which was just about 100 bed going into 200 beds at that time. And we put a small, like a 30 crore check at that time. And today they are probably the largest or one of the largest hospital bed chain in Tamil
Do
Nadu.
they still hold that investment, or did they hold it?
So it was exited later on
Acha.
and with the good handsome returns. And there were a few other investments, but while we were making these investments, 2010, the well-known transaction happened where Purplle sold their healthcare business to Abbott for $3.72 billion.
Wow.
So that changed the game, and a part of that was non-compete.
Acha.
And in a way, while this fund was just a $100 million fund, and against that large payout, and with non-compete playing a role, it was kind of a tough call where I had to go back now to the investors, and we had to change the sponsor. And we had somebody else who shook hands with Ajay Piramal to buy over his stake. In fact, 30 out of the 32 institutions had agreed as well, that they were okay with this new arrangement. But there was at least one institution who just put their foot down and they said they don't want to work with the new sponsor because they invested in the name of Piramal. So this was by December of 2010, and I thought that this is not going anywhere, so let me move on and set up my own fund. That's when I decided to move on. So March of 2011,
Acha.
I was all by myself. At this time when I went to Ajay, he asked me the same 2 questions. Do you have 2-year backup? And I said, same answer. I don't even have 2 months backup. He said, do you have a team? I said, no, I don't have a team, but I will figure it out this time. So I decided.
But this
to
time,
move
this was a whole new word.
on. This time I had a lot more experience.
Correct. But I'm saying now it's no longer private equity. Now it's venture capital.
That was venture capital. So I kind of, so the other thing which really worked was the whole concept that I put together with the IIT alumni model. I kind of thought of, the only asset I had was my network of the IIT alumni ecosystem. So the original model was of the IITians, for the IITians, by the IITians. The idea was to reach out to the entire alumni base of the IITs across the world,
Okay.
ask them if they would like to invest in a fund, and I thought initial target was 200 crores. The idea was to invest in such a way that I knew the exit was a big problem. If I have to go and raise capital, I have to invest at a stage where I'm able to return the money back to the investors. So seed was out. So I knew that if I invest at seed stage, I'm going to get a single digit stake in companies.
Yep.
I knew I wouldn't have control at the time of exit. So I knew I needed minimum stake in these companies. I would do a concentrated portfolio, Series A bets mostly,
Yeah.
and target for a 5 to 6 year time frame. So for a 200 crore fund, I thought maybe 10 investments would be ideal. So between 2011 and 12, reached out to about 75,000 IIT alumni,
Wow.
a database that I created over time. And
You created that database of 75,000
IIT alumni.
Wow.
So, I mean, there were quite a few tools and quite a few, at that time, you could actually hack into lots of things. So downloaded the database and reached out to those alumni and basically asking them three
And
things.
this is like hardcore, cold calling at this point.
This was cold calling, but with a very common connectable message.
Correct.
Where
the
I-
rapport building was easier because of the
Yeah,
IIT
so it's
connect.
like I'm an IIT Delhi alumnus. We're building a fund for the IITians, 200 crores in size, with the idea to invest in IITians. And one thing which we did fundamentally different at that time, and of course I onboarded some of my co-founders in the process because they were my batchmates, hostel mates. They loved the idea, so they also came on board. The idea was that 25% of my carry I will give back to the IITs as endowment.
Wow.
So the concept of endowment was non-existent in India.
Correct.
So this particular idea was the main hook for the alumni because they saw some kind of a give back to the system.
Right.
And there was no other way to give back because the only other way to give back was to give it directly to the IITs. And they didn't know what was happening with that money. So even if they were giving back, so they didn't have a say on
Clarity,
that, clarity on that. There were no systems, policies, and things like those. So this kind of a structure really excited them. So I met the directors of all the IITs with this model. We set up a IIT Alumni Trust as the anchor investor of the fund, with the deans of the core 5 IITs on the board. IIT Delhi, Bombay, Kharagpur, Kanpur, Madras, deans came on board, with the 25% of the carry going back, they being the guardians of the IIT alumni capital. And the ticket size being small at that time, this is pre-AIF era, where the individual investor could put even 10 lakh rupees.
Right.
So we raised about 50 crores from the alumni.
Acha.
And the remaining 190 came from those institutions who had invested in the Purplle fund. So right from our first fund, we had the likes of State Bank of India, LIC, SIDBI, Punjab National Bank, and you name it. So we had the who's who of the Indian institutional investors in the first fund
That
itself.
is amazing. Wow.
So I think since I had the experience of raising a fund from them, and when I went back to them with this whole concept, with a board, advisory board, which is all distinguished alumni, with Mr. G.K. Pillai, who's the chairman, who came on board right after his retirement as the Home Secretary of the country.
Right.
Various other distinguished alumni like Ashank Desai, Ravi Dhariwal, and Pradeep Gupta, very well-known people in the system, and Professor Ashok Mishra, who's the former director of IIT Bombay. They all loved the concept. And once they all came on board, this actually became an institution all of a sudden. And
very early. I mean, first fund, already an institutional level play.
Yeah.
Very rare to have, right?
yeah, so I think it all came from the fact that I knew that failure was not an option.
Right.
And I knew that nothing like this existed before. I knew that nothing like giving back existed before in venture capital ecosystem. And the IITs I knew had huge potential. And honestly, I had zero savings of my own at that time. I actually borrowed 40 lakh rupees to survive for 8 months from ICICI against my home. Just to survive for 8 months. I knew that 6 months I will raise a fund, and if I don't survive, then I'll go back to the job market. So that's how I started. Unfortunately, then, one of my co-founders, he said, what are you doing? I mean, you need to at least have some money. So he wrote a check to kind of make sure that at least we survived. So that's how we did our first fund. And I would say 10 investments, one dragon already.
Yeah.
Exit. Second dragon is happening as we speak. Already given a 3x return on cash.
Wow.
And another 1.5x going back as we speak. So
you're already in the carry at the moment.
already in carry. We've already given the endowments back. And in fact, 2017 was my 25th year reunion at IIT Delhi. I made a presentation to the board of IIT Delhi to set up India's first endowment fund. I remember Kumar Mangalam was the chairman at that time, so I made a presentation. They had given me a 15-minute slot, but this whole discussion ended up for 2 hours, where the idea was that even going down to the detailing of who will contribute how much and how will we go to set up a $1 billion fund over a 5 to 6 year period. my own batch contributed 1 crore as the seed capital to that fund.
Okay.
And the whole concept started at that time. So it took 2 years from 2017 to 19 to then take it off the ground when the Honorable President launched it at Rashtrapati Bhavan. The Honorable President Kovind at that time invited me personally, my family, IvyCap team, and initial set of alumni who contributed to the fund, and the likes of Sachin Bansal, Benny Bansal were all contributors to that initial corpus. And that's how we launched India's first endowment fund at IIT Delhi.
Wow.
So, which became like the first such fund with the contribution from our carry and seed capital from a batch, and then a lot of other people came on board.
I feel Vikram, that you have this very strong sense of belonging, like family, like my batchmates. I want to come to that, but before that, I really want to ask. Tell us about your first deal, because like in private equity, 2008 or 2010, I think private equity in India had just it had become a buzzword. People had done private equity funds. But venture capital was very early. I entered venture capital in 2011. And remember, SHA kya hota hai was like, what is an SHA, right? And founders used to be like, okay, you'll give me money, so what do I give in return? Like, what collateral do I have to give? No, I need equity. I said, what are you going to do with the equity? It's worthless, isn't it? But obviously, you were writing a really big check. And that too, very, very early, 2011, 12. That kind of check coming from an Indian VC, very rare. You usually at that time you had the big Sequoias, the foreign VCs, the Sequoia, the Matrix, the NEA, the Nexuses of the world that would write that kind of check. Lightspeed had just started writing checks, but here's an Indian VC, right? Doesn't come from the ecosystem, doesn't come from that traditional, the route, and is writing, these amazing. At that point, maybe $3 or $4 million checks at Series A. Tell us, what was that experience like? Tell us about your first deal. How did you win it?
So, the advantage of going through 75,000 alumni network, right? Mm-hmm. So those 3 questions that I was asking them at the time of sending that mailer. Number 1 was, would you invest in the fund?
Right.
Second one was, do you have something that we can invest in?
Yep.
And the third one was, give us 1 day of your month for mentorship and we'll take it contractually. So that did wonders. Do you have something we can invest in? Came back with a huge response.
Achha.
That here is my startup. Here is what I'm working on. Here is what we are doing. And we need funding. Or somebody would say, I don't need funding, but I need mentorship. So that was, in terms of volumes, was not easy to handle.
Yeah.
Almost 90% of that was asking for seed capital. But one thing we have decided was that we were not going to do seed capital, because exit was very, very clear that we have to have 5-6 years exit, and we need to have minimum 20 to 30% stakes in companies if we have to have control at the time of exit.
So important that people understand the meaning of ownership in venture capital. It's not about how big, it's how much do you have of that company.
So Purplle, actually, for 15 crores, we took a 30% stake in the company.
Yeah.
And this I'm talking about 2014-15.
Yeah.
And at that time, of course, everybody was like questioning the whole concept and why will this survive? There is Amazon, and even Nykaa was there in the market. So it was kind of not easy to build like a conviction. But
it wasn't even doing, if I remember correctly, it wasn't even looking at doing cosmetics at the time. It was supposed to be a massage booking platform.
So that was, they had started doing the cosmetics as well. I still remember they were doing about 60 lakh rupees monthly revenues. And there was all these spa booking kind of model as well. It sounded exciting. We were more excited about the fact that, it's a very simple logic that we applied was that the online penetration for selling is just about 1% or less at that time. You're talking about $30 billion market opportunity, scaling almost about 15%. So you're talking about this becoming about 60 billion in 5 years.
Wow.
And if that 1% is going to become 10%, if the penetration is going to increase, we're talking about 1% of 30 billion is about 300 million.
Right.
Going to 10% of 60 billion, which is 6 billion. So the growth of the online was much higher. And if in that market you're number 1, number 2, even number 3, you could actually build $1 billion business. So that was a very simple thesis. So and the most fundamental aspect was the founders. So for us, founders were very, very important.
Yeah.
And our thesis was very simple. We said like India was going to do well as long as the market opportunity is huge and large enough and the company can be number one, number two, or even number three if the market offers, three players or four players. Then it comes down to execution. And execution is about the founder's ability to execute and their willingness and their passion and their incentive structures. So then you have to spend most of your time understanding that. And if the founders were coming with the background of the IITs, which is what happened in case of Purplle, IIT Delhi and IIT Kharagpur. So it kind of tick marked on lots of those things. So
Purplle was your first investment?
Purplle was one of the first investment, not the first investment. Our first investment was actually a company called RML, Reuters Market Light, which didn't do very well. In fact, there is a little bit of interesting thing there. Our first investment of Fund 1 didn't do very well. Our first investment of Fund 2 didn't do very well. First investment of Fund 3 also was like shaky a little bit. So we kind of decided that Fund 4 onwards, we'll start from second investment. So that's a little bit
like
of
India and cricket at one point. Play the second innings first.
But anyways, I think it was a learning experience because it was focused on farmers. Thomson Reuters was already an investor in the company.
Achha.
And they had already invested a lot of capital with a very unique model. There were no smartphones at that time. And we really liked the model that smartphones, once the smartphone penetration happens, there's a lot of opportunity to really build this model. But certain very basic things happened in terms of, the SMS pricing suddenly increased quite substantially.
Achha.
And that made the whole business unviable. Even though we had State Bank of India as a channel partner to go to all the farmers, we touched about 5 million farmers at one point of time. But it was about doing a follow-on round there, which we couldn't do because we didn't have that kind of capital. So we had to take a call to pull the trigger. So that was one of our investments. In fact, the only investment in a Fund 1 that didn't do very well at that time. Out of 10 investments, in fact, 2 investments didn't do very well.
Achha.
2 dragons, another 2 investments which gave us more than 10x returns. And so that's how overall we kind of were able to generate very good returns.
And so usually when you're going through and meeting these founders, is there like a checklist that you go with that, this is what I want to see in an investment? Because it's a very large portfolio of fairly distinguishedly, in different verticals, Purplle in one, the company you talked about, I think BlueStone.
Yeah.
Sort of online, but different vertical altogether, much more premium sort of a focus there.
So yeah, for us, we were not going from the sector approach. We were going from the founder approach.
Okay.
So we were looking for starting our approach with the IIT alumni network.
Okay.
And we were getting
were all the 10 companies.
Not all the 10 companies. Achha. So even if it is recommended by an IIT alumnus.
I see.
So 6 of our companies were IIT alumni.
Okay.
Another 2 were IIM alumni.
Okay.
And the remaining 2 were neither. And that continues to be the ratio even today. But 60% are IIT alumni in our portfolio. Another 20% are the IIM's alumni. And the remaining 20% come from other backgrounds. So the model is more about the IIT IIM ecosystem supporting us in terms of our fundraising, in terms of deal sourcing, in terms of our mentorship.
So true.
But when it comes to actual deal making, there we are very flexible. But very naturally it happens that a lot of deal flow that comes from the IIT alumni ecosystem turns out to be very interesting deals.
Yeah.
So our assessment is that there's a 90% chance that when a deal originates in the IIT ecosystem, it is coming to us.
Okay.
IIT IIM ecosystem.
90%. That's a huge.
So we've done that analysis in terms of the numbers. And that's primarily because now people know that we have this endowment linkage. Now people know that the deans of the IIT sit on a board. People know that the former directors of IIT sit on a board. And we've actually given back the endowment to the IITs, and that continues to build further. In fact, across our 3 funds, we've already estimated about 200 crores going back as endowment.
Wow.
With a leverage of 5x coming from people who are willing to put more capital to create 1,000 crore corpus for the endowment, with the idea to really help grassroots level research, innovation, and entrepreneurship across campuses.
Wow.
So that model has actually worked very well for us. So the deal selection for us, happens in that order.
Okay.
So look at the founder first, see what they're doing, and why they're doing this, and so the why part is very important for us.
Right.
And then we try to see that whether they can be number one, number two in the space they're operating in. Even if the business model is not something in it at that point of time, we believe can be number one, number two. Because if you started with the business model, you would have never invested in a Flipkart.
Yeah.
Because that was a book selling model,
correct.
right? So you're investing in the capabilities of these two founders who could take that book model into the entire e-commerce model. So that's the way you have to look at deals. Basically look at the founders and their vision and which direction they're headed to, and are they really passionate about what they're doing, and can that be number one, number two in their space. So once you're convinced about that, then it is a lot about valuations and structuring of the deal, and will you have enough control at the time of exit. So exits, again, is very fundamental, something which has really worked for us, and that's why DPI is very high.
So important to, again, you have to think of the way to get out at the time of getting in, right? And I think Purplle being a very, very key example. It's a common portfolio company for both of us, but they had a lot of trouble in the middle, if you remember. But the founder just persevered, right? And I think in some ways also the help that they got from JSW in the middle. I think you were also co-investing, and you kept upping this game. What, like, at some point, I wasn't deeply involved in the company, but it's like they keep raising small chunks of money, and then suddenly you had this massive round from Goldman, I think, that came in and put in a massive check. But you must have had some incredible belief in those 10, 11, sort of bridge rounds that took place.
So of course I was on the board of the company, and the company, as you said, went through very rough patches. In fact, there was a time when somebody issued a term sheet and then backed out. There was this kind of a fear that this company will not get funding at all. And then later on, also some term sheets came which were at a substantially lower valuations.
Yeah.
So which we thought, it's like, so it was a tough time. But we spent a lot of time with both Manish and Rahul and the rest of the team to actually work on different possibilities, different models. And one major thing that worked in their favor was this whole capital efficiency. They were extremely capital efficient. And I think that's one of the core things.
And they continue to be, right? This is an insane amount.
They continue to be capital efficient even today. So in fact, when we're looking at Purplle, one of the biggest things that really attracted us was the capital efficiency mindset. And that's one of the core things we look for in any investment that we make. Because if your mindset is capital efficient, then you will cross through any phase of difficult situation. And that's exactly what happened with Purplle. Because of the capital efficiency mindset, they were able to pass through that tough situation, in a good way. So, and fortunately, later on when the Goldman round happened, that was kind of at the right time.
Yeah.
I think this was about 2019. We put in more money from our fund too as well. And the company continues to do well.
And then after that, you took, that was your first Dragon exit, I believe, was Purplle?
So 2021, somebody just walked into my office and said, would you sell Purplle? And I was like, why would we sell Purplle? And said, we can get you a good deal. So that's how the discussion started. And this is like mid of January. And by mid of March, we had the money in the bank. So,
wow.
So it was that quick. And it was very interesting. So they said, if you want to sell, what price would you sell? And we just quoted a price which we thought they will refuse. And they didn't. So we're like, wait a minute, did we make a mistake here? But I think we are quite happy with the exit value, 330 crores on a 15 crore investment, getting a 22x return. We still have stake in the company.
I think Fund 2 is still...
Fund 2 is still invested. So that's, again, likely to be Dragon for Fund 2 as well. So which is a 530 crore size fund. So I think... so it obviously turned out to be good.
But what was very interesting was 2021, you're talking about a venture capital ecosystem, Vikram, where too many funds forget about returning a return on capital and not even return principal. It was a very common, when I started, I started my first fund in 2017, 18, people will be like, "यार fund क्यों चालू कर रहे हो?" If you start a fund, you won't return money back. That was the common belief, right? That funds are only made for the fund manager, not for the investors. But you were one of the first funds. Again, very unique situation. Primarily Indian capital, focusing on Indian Series A in a very competitive Series A ecosystem, right? Because other funds with much larger capital, and here you suddenly return, bam! Listen, here's 1.25 times the money, and that changes the mindset.
Yeah.
Right. And what was the reactions like from your LPs at that time?
So we had about 20 plus Indian institutions as our investors at that time. And they'd never seen capital back. And I think when they saw just one single exit, giving them like at least 1.35 times of the entire fund, they were like, in fact, I still remember the likes of State Bank of India and all that, they were like talking about it for a long time. Because this is something which actually defined, in a way, a new kind of a phase for the entire venture capital system in the country.
Especially for homegrown funds.
For homegrown funds, because people had never seen exits before. So 2021 itself, I think we had returned close to 2x of the entire fund.
Wow. Which was the second exit?
So we did 3 exits that year. We returned another investment company called Lecture Dental Labs.
Okay.
We invested 25 crores in that company.
Wow.
And this was again a very interesting investment. All their dental labs were in the US. Very similar model to what I had done in the Purplle diagnostics, where we had acquired, diagnostic labs in India. These guys actually acquired their dental labs in the US with their back office in India and built it up from bottoms up. So we invested 25 crores at the time when there were just 2 labs. In fact, today they are the 4th largest dental lab in the world. And we took an exit in 2021, gave about 100 crore exit back to the investors. Clovia, which was another, we put in 15 crores, again 30% stake we took in the company. There again, we sold it to Reliance. And it was a stellar exit for us. So these 3 exits put together, we were able to return.
PharmaRack was also...
So PharmaRack was also there. That was from Fund 2.
Fund 2.
So these were Fund 1 investment returns. So 4th exit, which happened in 2021 itself, was PharmaRack, which was a Fund 2 investment. So that we held only for 15 months. We'd invested about 20 crores and we returned 52 crores in 15
amazing
months.
Wow, these were like just amazing numbers. Like 2021 was just all about exits.
Correct.
And then obviously BlueStone and these companies. Has your thesis, however, changed? I think the Indian ecosystem went through a massive change from the time you started. Obviously there was the Geo effect, then there was the GST effect, then there was the Demon effect, and then after that, obviously you also have what COVID did, right? And galvanizing, all these things have taken place after you started your fund. How has that ecosystem changed for you compared to, 2011 to 2025?
So it's quite interesting. Multiple things evolved over time, right? So if you look at each of the piece separately, so there is fundraising as one piece. There is regulatory environment as the other piece. There is entrepreneur mindset and ecosystem as the other piece.
Right.
And there's the exit environment and the capital coming in, the foreign capital coming in is the other piece. If you look at each of these, there's been substantial evolution of the Indian venture capital startup ecosystem. Of course, 2012-13 was the time when the AIF guidelines came into play. So that actually changed the game quite a bit. It was good for the overall ecosystem. Even though at that time, because we were building a model of bringing all the IIT alumni who were willing to put 5 lakh, 10 lakh rupee checks, for us it was a jolt at that time because we now couldn't take less than a crore from an individual. So we had to stop that and said, okay, we can't. Even though we were in VCF, we could still take that kind of money. But we had a meeting with SEBI and they said, even though as VCF you can do it, but it's better that you don't do it. So we stopped doing that. So the regulations have evolved quite substantially since then. So I would say SEBI has matured quite a lot. Our taxation policies have evolved a lot. And I think today's tax is very heartening. when you hear things like the capital gains and the business income issues in terms of selling your assets. And I think that was one of the issues we've been kind of talking to government for a long period of time.
Right.
I
think in some ways this asset class also grew much faster than they must have imagined. I mean,
yeah, it did. When I started IvyCap, there were 8 funds in the country. Today, I'm told there are over 1,500 registered funds with SEBI, and there are about close to 500 members of IVCA.
Right.
And I think, but I think we feel very fortunate when it comes to domestic capital. People tell us that we are the largest in terms of the domestic capital.
By far.
Where
it's largely domestic capital.
It is domestic. I mean, if you look at the 10% non-domestic, is also IIT alumni from around the world.
Right.
So if it is coming through Singapore, it is IIT alumni. So in that sense,
somehow you never pitched to the large institution.
We didn't have to. So first fund we were raising 200, we ended up raising 240.
Right.
Second fund we were raising 500, we ended up raising 530. Third fund we were targeting 1500. Our first close happened at 1600, and we closed at 2100. So there was no need.
I know that was a big announcement. 2,100 crores.
Yeah, so there was no need actually to go beyond our existing LPs. Third fund, we are talking about even larger than this. And already about 70% of the fund is getting committed from existing investors.
Wow.
And again, we don't feel the need actually to even go out. But people do tell us that it's a good idea to diversify a little bit. So purely from that perspective, we might take some capital, but we will not go out and pitch substantially if the investors were interested. And this is exactly what happened. No family offices in Fund 1. Only one family office in Fund 2, and that too inbound interest.
Right.
And Fund 3, only 10% of the is family office funds. The rest is all institutional capital and IIT alumni capital. Again, because we didn't need to. So same thing in Fund 4. We don't need to raise dollar capital, but if somebody says that, hey, we like your fund and we like to be part of it, we'll probably take that.
Wow, very, very interesting. So now, obviously, because even though you're a Series A, right, failure is always around the corner, and you have talked and you're very, very vocal about it. How do you deal with failure? Like, how do you deal with, let's say, mentoring the founder who's going through, obviously, after raising capital from you, he's got a lot of capital, right? 20-30 crores in today's parlance. Even 2011 में जाए या 2025 की बात करें, it's a large amount of money. And obviously, they're going through an emotional journey of their own. And you're also now going, listen, I know that this is over, but how do you sort of work with that failure? How do you put them through the process? And how do you deal with the failure yourself?
I think, first of all, the definition of failure is important. And I think I consider failure means that when you give up on something.
Okay.
And failure doesn't mean that you've not been able to achieve what you're trying to achieve. Failure is that, you just gave up and you just said, oh, I'm not able to do it. That's what failure is. So I don't think we've let failure happen so easily.
Okay.
So one of the fundamental things we do is work very, very closely with the founders.
Achha.
And we keep asking tough questions, and we keep asking where the gaps are, where could the gaps be in future. And that's the advantage of this IIT alumni network, right? So if you see that there is a potential gap building up in the technology area, so we'll go look for the IITians who are actually good in that space and try to bring them to work with the company. They could be not very good in marketing or customer access or taking their company international. Again, IIT alumni network is global.
Correct.
So again, we go through that network, and IITs themselves now actually reach out to their alumni and say, help IvyCap, because eventually they know it's an endowment linkage that is already there. So that way we are very fortunate. So we haven't let failure happen so easily. But despite that, we have failed in situations like COVID, where you were totally helpless. You couldn't do anything. We had a company in dermatology chain of clinics, which was just starting to grow at that time. And all of a sudden, you have 0 customers. So, if you don't have enough capital to sustain, you have to take a call whether you want to just survive for another year with some limited cash, or do you want to come back to it? So the decision was, let's come back to it. Similar situation happened in case of another company called TaskBob in a Fund 2, where it became a little capital intensive model. It was like an urban company model.
Acha.
One of the first ones, in fact. Around the same time, and when urban company was not an urban company, 5 young IIT Bombay guys who were actually quite passionate, and we thought these guys had in them what it took. And again, unfortunately, 2015 was the time when they had started the business and they were facing a tough time there. Couldn't sustain that tough time because a little bit of capital expenditure was required, and we didn't have that kind of capital. So I would say that there were certain situations that we couldn't prevent, but there were situations like you mentioned, Purplle.
Right.
Then there were a few other situations. Even BlueStone went through a rough patch.
So true.
I
I think almost all good businesses must go through almost, I would call this trial by fire.
Yeah.
Because they just come out like with this, with like this incredible foundation built on steel, because you've seen in some way death there, right?
Yeah.
And I think in many cases, BlueStone, even Purplle, they've seen like, okay, we could have literally, one bad quarter and that was it. And I think now when you look at Manish, or you look at, you speak to Rahul, that confidence comes from the fact that kuch bhi ho jayega na, we've seen that.
You're absolutely right. Once you've seen failure at the very, very close, the face of it, then you become very bold and you know how to handle those situations. That has happened with many of our companies. In fact, situations come and go, and if your long-term vision and long-term passion is there, then you sail through that. So fortunately, and if you are able to provide the support system, not just the funding, but the quality of people and access to that ecosystem, I think that does help.
And so, Vikram, imagine if a founder's now listening to this, and is as a part of their preparation to come and meet with you, they need to know like, hey, what are the 3 things that Vikram's really going to get into? What would those 3 things be?
I really spend a lot of time on the why part of the founders.
Achha.
Why are they doing it? I mean, what is driving them? The motivation behind doing what they're doing. Because eventually, if your motivation runs out, however the good quality the business model is and however the good funding you have, you will not stay there. So I spent a lot of time on the why part, why are they doing it? And the other part is also the entire, the motivation also comes from the incentive structure, the team structure,
Achha.
how the cap table is structured. So who owns how much, and many times I've seen cap table is less absolute, more relative. So even if you own, let's say 30% of the company, but the other person owns 35%. So you start thinking, I deserve more than this guy, right? So even though 30% is a good number. So many times as founders, that start building team dynamics.
Right.
So I personally spend a lot of time in terms of looking at the structure. So it's important because it starts showing up at some point.
That's true.
Majority of the failures happen when the founders stop looking at each other, stop talking to each other, or one of the founders just says, I had enough of you and I'm leaving. That's when the company starts breaking. So therefore, it's very important to spend time on that. So that's number 1. Of course, number 2 is it's important to know the space they're operating in and is it large enough? And part of that also comes from understanding of the founders. Are they aware of the complexities of the space they're working in? Are they aware of the risk factors, including the competition, including what can go wrong? How will they deal with the tough situations? That becomes very important. So effectively, it goes back to the quality of the founders. And then, of course, the capital efficiency mindset. Do they treat capital fairly, and
How do you test for that, Vikram? Because they can come and tell you whatever they want. But आप कैसे test करते हो इस चीज़
the
को?
fundamental starting point of testing that is, if your business needs only 20 crores for the next 1 year, you're asking for 50 crores. The question is why? If the answer is that I want to raise 50 crores because I don't want to go back to the market to raise the remaining 30 crores, then that's fine. Then take 20 crores now and 30 crores later. I'll commit 50 crores. You take 20 crores now and 30 crores later. So a lot of discussion happens around the actual business plan, the financial projections, and you go down to the detailing of the founder's salary, for example, how much salary they're paying to themselves. When you see that the day the funding comes in, the founder's salary goes up 6 times, 7 times, you try to understand the reason for that and the rationale for that. If a founder comes and tells you that a CEO in the market with my experience will get 1 crore salary, therefore I should be getting 1 crore. So then you have to tell him that you decide first, are you a founder or an employee?
So critical.
So these are the kinds of things that tell you the mindset. So how they think of their marketing expenditure, how they think of hiring people, what kind of people, and see the fund requirements is not just about arriving at a number. It's about how you arrived at those numbers, and are you looking at creative ways of optimizing your costs. If a founder comes to me and says that, even though I need to raise 20 crores, but I'm trying to build a model where I don't even need 20 crores, I may need only 15 crores.
Wow, that's amazing.
Because I'm trying to optimize on these costs. I would give 50 crores to that founder. So there's a difference. So you need to really get into those kind of details and discussions where you get to understand the founder's mindset about how they deal with money.
And for you now, has the check size also changed? Obviously, it must have gone up.
So our Series A check size has gone to 50 crores.
Acha.
We can do follow-on of about 100 crores.
And do you invest, is there a set number of rounds you'll do the follow-ons?
We can do follow-ons. Now with the next fund also coming, we can do even larger rounds.
So like Series C, where do you stop?
We can go up to Series C, Series D as well.
Acha.
So, and we started now from, so far Fund 1, Fund 2, we're not investing in seed.
Okay.
For an obvious reason, we didn't want to, exit was an issue. Fund 3 onwards, we allocated 100 crores
Acha.
for seed stage. And
what's the check size there?
Up to 4 crores.
Okay.
So the idea is that you get an entry. There's not much negotiation on the valuation there. It's more about the right founder, right space, and getting an entry.
But are you targeting like at least 10% ownership, or is it
no,
relative?
No, there's single digit is like somewhere around 5%, 6% kind of a stake, as long as the company is showing promise of scale. So we don't look much into, as long as the valuation is in the range. It should not be like a crazy valuation,
right,
and with rationale not explained. Most of the deep tech investments, for example, when they come into TRL levels, it's very hard to kind of justify certain valuations. So there you try to get some benchmarks, but any benchmark is very hard to explain. So there you take a bet. So since it's coming from the seed side, you actually have already decided that.
True.
Even if my entire 100 crores goes down the drain, for example,
make it up.
I will lost 5% of the total fund. But even if one investment comes out from there, which actually generates good returns, and this is again going back to the same ecosystem, the IIT-IIM ecosystem. So the core theory and the thesis remain the same: the founder, the space, and some of them have already started showing value. In fact, we've done about 13, almost 15 investments from that pool. And some of them have started scaling up already. And I think that strategy is paying off.
And are you calling that a separate program? I know, like, for example, Axel calls it Atom. Or
we don't call that a separate program. We have a separate program called IvyCap.
Okay.
That we've created as a separate team where, when we started this entire IvyCap model, and when we reached out to 75,000 alumni, a large number of people came back and said that they're willing to offer one day of their month as mentorship. Right. And large number of people came and said, we're looking for that guidance. We thought there was an opportunity to really put all this on a single platform. And we created a separate team under the brand of IvyCap.
Okay.
With the idea to engage with the campuses of the IITs and IIMs. So we have a team that goes and visits all the campuses. This team has to visit all the campuses within a defined frame of time to understand their core initiatives happening in research, innovation, and entrepreneurship.
Got it.
That's all kind of getting loaded on our platform. Their IP getting created, their research projects happening, and any startups which are happening in the campuses.
You should be.
So that also becomes a deal flow for us. And part of our endowment actually goes into that. So part of our endowment will go into giving grants to those people. to run some fellowship programs. So the vision there is to really build a very large corpus over a period of time. I mentioned that 200 crores we are returning just from our 3 current funds with another 5x leverage, giving us 1,000 crore of corpus to invest in research, innovation, entrepreneurship across the campuses. We believe that, and there we're not expecting returns, by the way. The idea is just to influence the grassroots level innovation and
get that foundation going.
Get the foundation going. And once we got that right, and I think it kind of builds a very powerful foundation. So we are quite excited about that.
So I've normally not had a chance to ask this question of most VCs, but I can ask you because you've done exits. So I want to ask you you have an investment framework, and each VC has an investment framework. What's your exit framework? Like, how do you decide? Like, you decided Purplle. Obviously, there was somebody who came in and made an offer, but there was still something that drove you to make an exit. And how do you decide, like, the next company I'm going to exit? Is there like some triggers that you put in your mind that decide?
So at the highest level, you are a fund with a defined timelines.
Right.
You have to exit within those timelines. So even after you take extensions are usually people don't think of extensions as outside of the fund life. They think it's like within the fund life. You have to think of extension as outside of the fund life.
True.
To kind of wind down your investments which you're not able to wind down. So first and the foremost principle is that can you exit the investment that you're making at the time of investing within your fund life? That's very important. So if you haven't asked that question, I think you will end up making a mistake. So every time we make an investment, the first and the foremost fundamental question is, when am I going to exit this investment and how am I going to exit this investment? What happens in the worst case scenario? What happens if I'm not able to exit?
Do you also ask that question, Vikram, when you're doing the follow-on? Because again, follow-ons will come later.
So follow-ons, see, the principle of our follow-ons also is that we have to deploy our follow-ons within the defined time frame. That's why we have 20% of our fund 2 allocated for fund 1 investments as a follow-on.
Achha.
20% of fund 3 allocated as a follow-on of fund 2 investments, provided we are co-investors and not lead investors.
Makes sense.
So we have created that purely to ensure that follow-on still happens. Also gives faster exit to the follow-on funds, therefore gives better liquidity. But at the same time doesn't starve companies. So we are able to continue on our commitment of supporting companies. Like what we did in Purplle, we did the same thing in BlueStone. So we invest in BlueStone from all our 3 funds.
It's almost like you have a growth fund inside the...
That is correct.
Yeah.
So that strategy has paid off, even from exit perspective. So everything has to happen. The investment period is very, very, hard defined with that 3-year time frame that we have to deploy the entire fund during that time frame. And even if it's the last investment, and let's say you have only 5-6 years left in the fund at that point, we will still ask the same question. And if it is not turning out to be exitable within a time frame, we may look for a Series B investment, therefore, if you're not able to deploy within 3 years. So we've done Series B investments, for example, even in Fund 1, Fund 2,
Achha.
Just to make sure that we were able to exit within the time frame. So exit is absolutely prime. And at the time of exit, what happens is that there are 2-3 things that we keep doing. In fact, every board meeting we have every quarter, we show a graph of every company with the y-axis as the value of our stake and the x-axis as the time. And if the curve is going upwards, that means the slope of that curve is increasing. And the slope of the curve is the future projected IRRs. And if the curve is like flattening, that means the slope is flattening, which means that your future IRRs are looking lower than expected. So if the curve is flattening, that company is ready for an exit. So there we don't try to optimize the exit.
But are you like valuing the company based on some metrics every quarter? Is that what you're doing?
So there is a third-party valuation that happens.
Every quarter?
Not every quarter, every 6 months.
6 months, achha.
And at the same time, if we know that this company is not going to give us a IRR based on this curve that we do, we would look for an accelerated exit for that company, which means that even if we get a slightly lesser value than we would anticipate maybe 1 year later,
right,
we are okay to exit because anyways the IRR is not going to make much difference.
Right.
But if the curve is going upwards, then there is a case for holding it for longer. Because if it is actually giving maybe 45% IRR, 55% IRR going forward, it does make a good case for holding it.
Yeah.
So, and our LPs are aligned with that.
Hold your winners, let go of the stragglers, right?
Yeah.
Effectively.
Absolutely.
Wow. That's a very, very clear framework in your mind.
And plus, exit, we are very clear that is a process and not an event.
Yeah.
And when you say it's a process, you have to start preparing for an exit 2 years before the actual exit event. And 1 year before the actual event, you have to really accelerate your efforts. It's many people will suddenly realize, oh, time has come to exit, and how do we exit? You end up selling at a heavy discount. I mean, the choice is yours. Do you want to sell it at a discount or a premium?
I'm so this is so much clarity. I think for a lot of the people that are also looking at this asset class, because if you notice, like a lot of family offices and all have written large number of checks in the last 2-3 years, and this is such a critical thing you just said. You have to start looking for the exit 2 years before the exit event is going to happen.
Yeah.
Because I don't think many people even realize the exit paperwork sometimes can take 6 months.
Absolutely.
Right? Just getting everything together, and obviously the guy, not the guy, but the team acquiring it will have so many things that they want from the investor.
Yeah.
And it's a process. I'm so glad you're saying it because it comes from experience, right?
Yeah.
So now I want to come back to that thing that we left earlier, the thread that is very strong. I feel that there's a very strong belonging thread with you, right? There's the very strong, like family thread. There's a very strong, you look at IIT, I think also as a family. You also look at IvyCap, and I know people that work for you that you also feel that that's my family. So tell us a little bit about the way you're building these both interpersonal and social relationships with a very strong sense of family.
So, of course, the first is my own family. I have one wife and 3 kids. And incidentally, my wife, of course, is a co-founder at IvyCap. In fact, she handles our investor relations. She runs our investor relations. And she's actually obviously been there right from day one. And despite the fact that she knew that we didn't have any capital, any savings at the time when we started, she actually supported in a big way. 3 kids are all studying in the US right now, but they're quite excited about what's happening at IvyCap.
Any IITians in those 3?
Unfortunately or fortunately, whatever you may call it, not really. And then, of course, IvyCap team is a family, right? I mean, it's a growing family.
56 people?
So about, around the 50 plus people. We already have about 56 people. And this is actually now a very solid team.
Yeah. Very large team, actually.
It's a very large team, but at the same time, we're building a foundation now to grow even bigger than where we are. So we are always building towards the future. So we have teams sitting in Bangalore, a team in Delhi. We have one person sitting in Singapore and one in the US.
Yeah.
So that way, and very coordinated effort. Everybody is totally aligned with our overall value proposition. So of course,
I read something like 18 principles.
No. We don't have 18 principals. I think total 18 investment professionals.
I see. Okay.
Yeah. So and now we are hiring mainly from the IITs and the IIMs.
Okay.
So we are going across the campuses. Our recruitment model is now, hire from the colleges and take them to the partnership level.
IIT, IIMs, and take them to partners.
That's right, and CAs also. Lateral hiring we are doing only for very specific roles, and we have different departments. Like IvyCamp is a separate team, which is part of IvyCap. In fact, mentorship is a different team. Then, in fact, mentorship is actually a completely separate organization.
I see.
With no financial interest from IvyCap, but supports all the IvyCap initiatives. And then, of course, we have operations team, we have the marketing team, and other people as well.
And this strong association with IIT.
Yeah, so I would say that I will always be indebted to IIT, right? I mean, especially IIT Delhi. And IIT Delhi and the IIT brand has actually given me everything that I am today. That's the reason, I think I will keep doing as much as I can. Even today, I sit on the board of this endowment fund and always thinking of creative ideas to give back. And whenever I hear the term IIT in today's budget, I think she mentioned the name IIT a few times. So it is quite interesting to hear that a lot of centers of excellence we're talking about, and a lot of funding we're talking about, and new enrollment we're talking about. So as a brand, it's amazing, and it's a global brand. And therefore, the entire 500,000 plus alumni of the IITs feels like a family. So that.
So what's your message to the founders? And before we get into rapid fire, what's the message to the founder? Today, a founder starts, things are changing so rapidly. DeepSeek comes out a week ago, $1 trillion of market cap wiped out, right? And now suddenly there's a whole talk about DeepSeek also coming to India and is going to be on Indian servers. And what's going to happen to this 11,000 crore AI initiative that the Indian government has? Are we going to create our own DeepSeek? What is the message today? Because I truly believe that maybe the world that where you started and then when I started, things were a bit more certain. At least there was a bit of certainty, but at least fundamental level pay, things are not going to change for the next 2 years. You have to obviously plan longer than that. Now it seems like a week later, right? You're talking about $600 billion of market cap wiped off of one company, which is the top 3 listed companies in India combined. What's your message to them today? Like if you're starting out, and let's say someone's saying, Vikram, tell me what should I be prepared for, and how should I make my company?
No, you're absolutely right. These are excellent examples of how things can suddenly change, especially in the tech world. And we're talking about AI, and now we're talking AI itself is getting disrupted.
Yeah.
So one of the fundamental lessons, and in fact, many of the founders who come and make a pitch to us and show us a 5-year plan in tech. So I think the fundamental question we ask them is, have you thought of disruptions that could happen 6 months later, 1 year later? And many of them actually haven't thought through this whole thing. So that's one fundamental question of what can change. While we talk a lot about this quantum computing, we talk a lot about Gen AI, we talk a lot about the IoT applications across different verticals. I think fundamentally, as long as you have a team which is very nimble, which can change to the, adapt to the changing world, you are able to cope with that kind of pressure that comes with it. So I think one of the fundamental things we keep telling our founders is be aware of what's happening around the world. If something is happening in China today, if something happening in the US today, very likely that will happen in India very soon. So keep your eyes and ears open. Don't just keep thinking and keep buried in your problem that you're solving. And many times founders do that. They are so enamored with the problem they're trying to solve that they forget what's happening in the rest of the world.
Yeah.
So that's why we keep organizing sessions of mentors from US, from Japan, from other countries, other geographies for our founders to understand what experts are talking in other countries. I guess as long as you're keeping your eyes and ears open,
be adaptable,
be adaptable, be aware, be ready to change. Don't put your eggs in one basket. Keep diversified and also keep thinking that things go wrong. How will you deal with it? So, it doesn't still guarantee 100% success. You will have failures irrespective, but at least your failure ratios will go down quite substantially.
And looking forward, let's say Crystal gaze this out 10 years, right? Where do you see IvyCap? Do you see it still being the VC, or do you see other kind of products or other kind of verticals you're getting into?
So one thing we see ourselves is like India's largest fund to go global. We believe that given the fact that we've been able to establish ourselves with a very unique model of give back and connect with the entire educational ecosystem, that model is not easily replicable because we connect the entire endowment ecosystem. And a lot of other countries actually want this model to be replicated.
Right.
So we'll take it to other countries as well.
Very interesting.
And we'll make it global. We will continue to build the entire strength of the connection with the IITs, IIMs, Indian Institute of Science, BITS Pilani, ISB, and many such educational institutions. We'll deepen our engagement with them and do the same thing with a University of Tokyo or an IIT Delhi campus in Abu Dhabi, for example. There are different. There's a lot of work happening. So we'll take it global, and I think we'll primarily continue to be in mostly private investing from seed to all the way to IPO stage.
Very interesting.
And maybe if there are other opportunities that we will evaluate along the way.
Wonderful. And before I get into rapid fire, I should have asked this way earlier. Why the name IvyCap?
So very clearly, when we're thinking of the whole concept of this IIT, as I said originally, it was all for the IITians, by the IITians, of the IITians model. And the idea was the Indian Ivy League model. So very clearly we said that we need to build a support system from the Ivy League ecosystem perspective. So investments can happen across the board, doesn't matter where the investments are happening, but the support system, because typical Ivy League institutions have a lot more resources, a lot more support, a lot more funding and other things. So it's better to build that ecosystem through that model. So that's how the name IvyCap came about.
Wonderful. Vikram, it's been such an entertaining conversation. I think just what it takes to be an entrepreneur in the venture capital world. And people must realize that eventually we're entrepreneurs too, right? And we have to crystal gaze, we have to get ready for the world. And it's such an amazing world vision. I mean, look at the model that you've created, an insane model. You've got a fund within a fund that's returning capital faster. You've got this whole endowment piece that you put together, and all of this very beautifully wrapped together, and a team of 56 people executing it. Which started with one person less than just about a decade ago. So I'm so glad that we've had this conversation. But before we end, we always need to have rapid fire.
Sure.
Because you could have prepared your answers before, but this time these ones you can't, right?
Okay. Okay.
So are we ready? Simple rules. I'll ask you about 7 to 8 questions.
Sure.
Whatever first comes to mind. We just want to understand a little bit more about Vikram the man.
Sure.
Right?
Sure.
First question. What's the first thing you do when you wake up every morning?
I'm very fortunate that we are on the 36th floor with attached terrace. I go to my terrace and do my yoga and walk. So I try to just do that. So first thing in the morning I do.
What are 3 words you would use to describe the Indian startup ecosystem?
Evolving, dynamic, vibrant.
What's the one app you're completely obsessed with right now?
WhatsApp.
WhatsApp. Now WhatsApp has that Meta AI also. It's very interesting.
Yeah.
Okay. The biggest red flag in a pitch?
When the slide of the founders is missing.
Has that happened to you?
Yeah, I've seen that. If a slide of the founders is missing, or if the founder slide is actually very complicated, that's a big red flag.
Wow. I mean, missing would be a big one, right? Okay. What's a company that you missed out on?
This question has been asked to me many times, and I would never, go back and say that I made a mistake. I didn't invest in Dehat, for example, when it was just a gap of 30-40 crore valuation at Series A.
Acha.
Didn't invest in Policy Bazaar and was looking for 50 lakh rupees.
Wow.
But if you go back to those circumstances and think of what would have changed, and I wouldn't change anything at that time, even knowing what's happened today. Because, you have to stick to your principles and, certain rules. You can't change your rules, just because you think that maybe this is an exception you should make.
So companies you missed out on but don't regret missing out on.
Yeah.
Right. Perfect. A book you think every founder should read?
I'm a big fan of biographies.
Okay.
So I try to lay my hands on any biographies, especially entrepreneurs' biographies. And
any particular one you remember?
Jeff Bezos is something which I think is a huge learning experience. And, when you actually learn about the lives of the people, where they came from, and how they built a $1 trillion business, it's mind-boggling.
Your favorite movie? Could be Bollywood, Hollywood. Either one works.
I loved Shawshank Redemption.
Amazing.
Yeah, I that's one movie which keeps coming back to my mind. So yeah.
And maybe I should ask this because you're an investor. Is there any book that you recommend to other investors? Hey, somebody calls out, I want to be a VC too. Here's the book you should read.
Well, I honestly, I'm not a person who would say that read a book and you will become a good VC. I think the fundamentals of valuation is very important. So if somebody doesn't understand the fundamentals of valuation, you should go back and read your textbooks. It's very important because many people don't understand. They have zero background in valuations.
That's so true.
And they just try to value companies and they mess it up.
We've seen that in the last couple of years. We're all still reeling from it in some way. All right. And let's see. I may have one more question. What's an entrepreneur you admire? Now, this is not about investing, but like someone who just, you believe, built an amazing business and something that you would say, no, this is how you need to build.
In global context, of course, I really admire what Bill Gates built and what Jeff Bezos built. In Indian context, I think I have a lot of admiration for Bansals. I think they came from just undergrad education and they didn't even do a postgrad and had no clue. Very soon they were hiring people who were much more senior to them, more educated, who were MBAs from Harvard and McKinsey were reporting to them, and they had no clue how to even manage them. I think they did a great job. So
and the massive exit, right?
And a huge exit. So I think they were the ones who set the trend for the whole industry. So yeah, I think, and of course there are many more, but of course if I have to quote just one or two.
And I'll have one last rapid fire question, then I have a request. So I'm going to first ask you the question: who's your favorite superhero?
Superhero? What do you mean superhero?
Like, are you a Batman, Iron Man? What kind of?
I'm not a big fan of all these, characters. But my real life superhero is my brother.
Acha.
So he's the one who told me what the word IIT means when I was in my 11th grade.
Okay.
And he told me what is IIT. I was like, come again, what it is. So and he's been my guide mentor, whenever I'm stuck in a tough decision.
Well, thank you so much, Vikram. It's been such an entertaining conversation. But, I'm also told, and that's why that Bollywood came in. Remember the ABCs we talked about? I'm told that you're a fantastic singer, almost like the Vijay KD of the venture capital ecosystem. So before we end this today, we need to hear you sing. So think of a song, whatever you would like to sing, but we would love for you to entertain our audience with your voice.
So of course, music is my passion, and I do a lot of music for impact. I created a song for Mother's Day. I created a song for Teachers' Day.
Oh yeah, you're a composer too.
So I do compose, and I did a song for IIT Delhi Endowment Fund, which actually became viral. I just did a song for Pan IIT as well, which is going to be launched in the next week or so. So yeah, I enjoy doing these things. So I think, but if you want me to maybe sing a few lines.
Definitely want you to.
So I'll maybe sing a few lines, which is a song thanking teachers. Okay. So this song was done taking people like Deep Kalra in the video, Shikhar Dhawan,
wow,
Shireen Bhan, Prashant Prakash, and one more person. What's her name? The founder of Sugar Cosmetics.
Oh yeah. Okay.
So Vinita Singh. So they are in the video along with their teachers, and the song is about they thanking their teachers for where they are in their lives. So, and maybe if you want to show a small clip of that,
we're going to put the link to the original video in the comments below, and we'll also embed it in the video. So definitely worth seeing.
Even though my throat is bad right now, but I'll make an attempt. गोरी सी पाती शब्दों में तुमने मेरे लिए ही तो लिखी, मेरी हथेली थी खाली खाली, तुमने उम्मीदों से भरी. जीने के माने मैंने समझे जब तुमने थामा था मुझे, मेरे कदमों से कहा जा छू ले आसमां, जो है किताबों से बढ़ा, तरकीबों से दिया जीने का रास्ता, जो जिंदगी से है जुड़ा, दे दिया हौसला जीत का हौसला दे दिया.
Wow, this is the words. The voice is amazing, but the words. So when do you actually write? Do you compose?
I keep working on it
Acha.
with ideas. Like Mother's Day song is done with 9 women entrepreneurs along with their kids.
Okay.
So I kind of requested 9 women entrepreneurs who have small kids to feature in the video.
And you're singing in the.
And I sang the song and basically did the whole song. So it's kind of, you feel good when you have. And the IIT Delhi Endowment Fund song was basically done to showcase the value IIT Delhi has created. So this song was picturizing the accomplished IIT Delhi alumni like Vinod Khosla. We requested him to come to the campus. Chetan Bhagat, the Bansals, Policy Bazaar, Yashish Dhaiya, Zomato founder. So we had all the founders of, in fact, on the day of the launch of the endowment fund, there were 30 unicorns in India, and 15 of them came from one campus, which was IIT Delhi. So that was basically...
It's also sort of the IPO capital. IPO.
So that was the kind of messaging in that song, that look what IIT Delhi has done. So and why should you not give back to IIT Delhi? And that song is actually also written with a lot of passion and a lot of...
We're going to put that in the comments below. I'm going to listen to it too, by the way. I think I've heard part of that song as a preparation for today, but I'm going to listen to it completely. But again, Vikram, I think mind-blowing. Thank you so much, first of all, taking time out and really enlightening that entrepreneurs and even people who are starting out on their investment journey, that it's the long game, right? It's not an overnight game. You're not gonna make it if you're just thinking 3 years, 5 years. You have to start thinking 10 years, 20 years, 30 years out. And how are you going to build an institution? How are you going to get out of investments? Because very easy to build a portfolio. Very, very easy. It's the easiest thing to dole out money, right? The most difficult part is to get it back.
Absolutely.
And in your case, also having a structure of where it needs to go once it's back. So I'm so glad that we had this conversation. But if there was any final words from you before we end.
No, I would say thank you so much, really. It's like very, some of these things that you asked actually touched my heart. And very rarely you go back in those days and times. And I think thank you so much for really such an enlightening conversation.
Thank you. Thank you so much, Vikram. Once again, what a great conversation. And we look forward to welcoming you once again in a future episode. But thank you so much. Have a great, great day.